Hello, Eunice.
Good afternoon. How are you?
I'm doing well, staying warm.
Staying warm and doing well. That's good. Yes. It's been a little bit cold, but I'm happy it's Wednesday. It's another wonderful winning Wednesday, which
Come on,
means that
say it with that pop.
we are midway through the week and a couple of more days until Christmas. So I am still busy running around and trying to get everything that I need before Christmas. But, and
Are you
you?
throwing me under the bus?
No,
You said, well, at least I am.
I don't know what. I
I'm trying to figure out what's going on here because I don't know what's going on here.
well, I suspect you're already done with what you need to do prior to Christmas. So,
I won't take it that way. You get a pass from me.
Mm,
All right. So, welcome to our viewers to another wonderful Winning Wednesday.
yeah.
We were going to have an underwriter who was going to help us and answer some questions about the underwriting process, but Mother Nature caught up, and our underwriter is ill. So, what we will do is walk you through what it is that we understand about the underwriting process so that you can take that bit of knowledge into your process as you are determining whether or not if a cash value life insurance policy really matters to you and what's going to happen as you are completing that application.
hmm
So,
Well,
welcome to another wonderful winning Wednesday. I don't think that we're going to be on that long, but also this is going to be our last wonderful winning Wednesday for 2025.
yeah.
We'll pick up again in January, but it's that time of the year where you're just hanging out and chilling with family, relaxing, decompressing, decluttering your mind, right? Because there's a whole bunch of new goals and ambitions that you're setting for your 2026. So I
Yeah.
think, well, one of the things that I've been advising coaching clients is about reflection.
Yeah. I was about to say the same thing that it's that time of the year where you want to spend a bit of time on reflecting on the year and setting your mind right for the next coming year. And not only just thinking about these things, documenting these things, and ensuring that these things are documented so that come December 2026, you have something that you can reference from as you sit back and look at what has been accomplished and what still is yet to be accomplished.
No, so that one of the things that I advise my coaching clients to do is to use a tool such as futureme.org
Mhm.
where they can document their 26 goals, like
Mhm.
something that they wish to accomplish by the end of 2026, and have that email come into them. You can use this tool and it'll send you an email with that document that you set up for yourself
Okay.
on a date in the future. It's called futureme.org. I'll put it into the chat just so that anybody who's looking for it. But that's one heck of a way to keep your your goals to yourself, and it's going to be coming to your email address. So if you're not willing to share it with someone else, you can share it there. But hey,
Mhm.
use this tool. Let me make sure that that is the right way. Yeah, futureme.org. and it allows you to deliver in 6 months, 1 year, 3 years, 5 years, or you can choose a date where you deliver your email to you at the same time. And that's a good way to keep yourself accountable to the goals
Right.
established for yourself. So,
Awesome.
Miss
So,
Eunice, when people I'm going to ask this question from a perspective of I don't know,
mhm.
but the best time to get insurance is when you're young. Can you either confirm or deny that myth?
What I will say is that we all have different needs. And the best time to get your insurance is before the need for it arises. And what I mean by that is if, for example, you have just bought a house, you just bought a house and you are the sole um, income earner in the household, all that means for you is that if you were to pass or when you pass, one, there will not be funds to pay your mortgage because you're no longer there. So, in that perspective, when would it be the right time for you to get a mortgage protection insurance to protect your mortgage to make sure that when you pass, whoever your beneficiaries are still able to continue paying the mortgage? Then it's at the time that you are actually buying that property, right? So for each person, basically, it's going to be different. Having said that, when we look at life insurance in general, based off of underwriting, when we underwrite, there are certain things or certain elements that are being looked at, one of which is age. The younger you are, the better. And when I say younger, I'm not talking about a baby or a teenager because you have to be at an age where you are actually bringing in income. Because what you're saying is once this income is no longer there, how much can you get to help those who are depending on that income? So, as a young adult, you're going to fare way much better than an adult who is in their late 50s or 60s. However, everybody can still get insurance, whether you are in your early 20s or whether you are in your 60s.
Got it.
That was a long answer, but in short, everybody's situation is going to be different. The best way is to really get in touch so that we can find out what is it that you're looking for and then we can work around it. Don't let age, as sometimes I hear a lot of people say, well, I'm too old now, right? So don't let your age deter you from looking into getting insurance. Let's first determine what's possible and what's not before you make that determination.
Yeah, but if you're using the cash value policy as a vehicle to build your own personal economy,
Mhm.
it's much better to do it when you're 25 than when you're 50.
It is much better to do it when you're still younger because based off of your age, right? It, the risk is less. The older
Mhm.
we get, the more the riskier it is, which is why as you get older, your premiums tend to be more than if you were younger.
So I'm going to safely assume that if you have the opportunity to get an insurance policy on a 25-year-old versus a 50-year-old, it would be better to get that policy on the 25-year-old.
Yes. And this is a conversation that a lot of times the more younger individuals miss. They feel, I'm healthy, I'm young. I'm enjoying life. Life is like I'm at the peak of my life. Why do I need insurance? Right. And then, of course, time doesn't really pause for anyone. Before you know it, you're in your 40s, you've got a family, you've got dependents, and you're like, okay, now let me look into getting insurance. And now your premiums will be way much higher than if you had done it when you were still younger. But of course, like I said, it depends. It's not just looking at your age, we also look at any health conditions.
So there's going to be a medical exam that is coming with that at the same time. Is that what I'm hearing?
Some policies would require you to have a health exam, some policies do not. It will really just depend. And this is one of the things that, as an insurance professional, one of the things that I do is when I'm out having conversations with potential clients, I am acting as a field underwriter. And what that means is that as I have conversations with you to determine more information, whether it's your health concerns or health conditions, I'll be able to tell what type of policy you can qualify for and whether that's something that will need a medical or not a medical. So everything has to be assessed. You have to be honest and let me know everything, because it's for your own benefit.
Mm.
Even if you don't tell me, the worst thing that happens then is the insurance company will still find out, because as much as I tell them the information, they also go and do their own research into your medical records. And if they find that we did not disclose something, then it comes back to backfire. That's why I say you tell me, you let me know beforehand. That way I can direct you to the best policy and best provider to go with based off of your health concerns. One of the things that's really key when as it relates to health concerns is that there's a lot of stigma out there where sometimes people will say, well, because I have high blood pressure, I don't think I can qualify for insurance, or because I've been diagnosed with HIV, that means I cannot have a policy. But those things are not necessarily correct. You have
Mm.
to make sure that you have those conversations first. Until you are denied, then we can say, yes, you cannot have coverage. However, one of the things that insurance really is looking for is that if you have a health condition, are you doing what is necessary or what is needed from you to help yourself? If I'm on high blood pressure medicine,
Mm.
and I do not take it, or I'm finding myself landing in the ER several times a year because I am neglecting taking my medicines, that does not reflect well, even for the insurance company, because they are going to know, okay, we are in December and I was in the ER in January, in April, and then in June, as well as August, because my blood pressure went up as a result of me not taking medication. However, if you come and you have high blood pressure, you are taking all your medicines, it's under control, then insurance looks at that there is a lesser risk with you versus with someone who knows that they need to be doing something and taking medication, but they're not. So they will then give you your policy. It all boils down to, are you doing the necessary things? Are you doing what the doctors have advised you to do?
Totally understand.
Yeah.
T- Tell me, does gender play a role into the cost for policies?
Gender does play a role. We see that females tend to have more favorable, I would say, favorable premiums or lesser premiums than males of the same age.
And
There's
that's
no,
because
So with insurance, all these things that we check in the back end, these are things that have been determined by actuaries. Actuaries have done studies to determine what information tallies with what age, with what illnesses, and all those type of things. So based on the actuarial tables that we work with that have been preset, I don't have a say in how they're set. So these have been preset. Women or females will fare way better than males of the same age, or of the same age, same sort of criteria in terms of that premium.
Hmm.
Um, and one of the things that I know a lot of times also people talk about is the smoking aspect. Nowadays, you have policies that also take people who smoke. Of course, it's going to depend on, other things. Do you have any lingering issues as a result of smoking, and how many packs you smoke on a daily basis, things of that sort. And they do even have policies where they say, we will take you, and if you are able to quit in, say, a year, your premium will change. So they're giving you that incentive maybe to quit if you had been thinking about quitting but haven't yet got into it. So there is a whole lot available out there. It really just takes having those conversations to understand what's possible and what's not, and then going ahead with your life policy.
So, last question that I have, and this could be as we close out as well.
Mm-hmm.
The business owner, if they're in their 50s or 60s, they can still get a policy for someone else who they have what is it called, the beneficial aspect, and that would help them to lower the cost of the policy. But are there any things that they can do so that they're covered, but also can take advantage of a policy at the same time?
As a business owner, when you do take out that policy, for example, if you take a key person policy, when I run a business, right? Let me give you something hypothetical. When I run my business and I have employees, I may have in my marketing team, I may have Lee, who is, still in their 30s, in good health, and is a key person. I know that without Lee, sales are not going to come in because Lee is awesome in that job. As a
Thank
business
you.
owner, I will take a policy against Lee, which is going to be favorable based off of Lee's age, of course, and other health concerns and things of that sort. However, Lee is just the insured, and I'm the owner of that policy. Being
Mhm.
the owner of that policy means that I'll still be able to, if I needed to tap into the cash component of that policy, I'll still be able to do that because I own the policy, even though someone else is the one who's insured.
No, that makes a whole lot of sense, and that actually helps with with bringing clarity to what could be at points in time
Mhm.
uh, a misconstrued or misunderstood topic that is here as a whole.
True, true. And a lot of times also, sometimes I tell, especially business owners who have kids, and I tell them, even if you take a policy and you include your kids as you get a children's rider so that your kids are underneath you, that's also very beneficial for them because as they get, depending on, of course, on the provider or the insurer, most will say when they are 21, then you can get them their own policies, and in that aspect, they don't really have to do a medical because they've already been insured. So sometimes it's just a matter of ensuring that because you don't know what's going to happen in the future. What if your child gets sick and they're no longer able to be insured? However, if when you have take out a policy on yourself, you put your kids who are still underage, you put them underneath you as children's riders, and then allow them to grow. And after a certain age, then you can get policies for themselves, or you can get policies for them, and we don't have to go through the
The medical.
medical because they've already been insured underneath you. So those are some of the should I say the advantages of just looking beyond just the one person who is getting that insurance and ensuring that your whole family is really indeed covered, right? And yeah, I think largely from underwriting perspective, there is a whole lot of things that are being looked at based off of these tables. You have your age, you have a proportion of weight over height, you have, any health conditions, you consider things like what's considered to be dangerous sports, whether you like going to, skydiving and things of that sort. There's so much that we will look at, that we will try and understand from your lifestyle in order to determine the amount of risk that you potentially carry. And then, based off of all those things, then you will be covered. If for whatever reason you don't meet some of these, you may still be covered at a higher premium. So just because you maybe say, hey, I know that I wouldn't really pass based on this aspect, don't then conclude that it means that you can never have insurance. You may be able to still get it, but maybe at a higher premium. It's worth checking, especially if you have people who are depending on you. Whether as a business owner, you have a business that you know that if you were to pass or when you pass, it's important that that business stays in business. It doesn't close down. You want to make sure that you have some type of coverage there. As a family, if you are the main income earner in the family, you have to make sure that you do get that coverage on yourself to make sure that when you pass, your loved ones are now not going to be left in a situation where they have to totally and fully downgrade because now there's no longer income coming in. They have to move out of that beautiful home and go look for somewhere else to go, all these things. When you have kids, those are some of the things that you need to consider to say, okay, now that I have kids who are underage, what would happen if when I die? It's going to be a different conversation for a parent whose children are already in college or are done with college. However, every situation is going to be different, but there is coverage for almost everyone.
I think this is a point that we have probably covered several times throughout the year, but
Yeah,
for now, what we can do is put a button on top of it, see if there are any questions. But if there aren't any questions, I was looking to see if there was any Christmas music that was uploaded into the platform that was going to be royalty free. But what I am going to share right now is a QR code that actually it can be scanned so that if anyone has a question or concern about what we have mentioned today, they could actually reach out to you on our website,
yeah,
VIP Insures, and have a conversation.
definitely. What's important is having that conversation to make sure that whatever decision you make, at least it's an informed decision.
Yeah, and I don't see that we have anybody there, but if anyone has any questions, you can reach us at one of the several websites that we have: VIP Insures or VIP Biz Funds. We are there. You know how to get in touch with us, but also we're putting it into the show notes description on different
Yep.
ways that you can get in contact with us. So I learned today that Eunice is technically considered a field underwriter. So even though our underwriter got sick, we do have Eunice that is able to step in and show up in many different ways and save the day.
Yep.
So with that being said, to our wonderful audience, we want to wish you and your family the happy holidays. May you, spend the time to declutter your mind, relax with your family, and reset for 2026. You deserve it. You owe it to yourself. Anything before we close, Eunice?
Well, enjoy your holidays. Spend time with your loved ones. Give your loved ones a hug. Give your loved ones a hug and all the best in the new year. May all your dreams, your aspirations come to fruition and see you next year.
All righty.